All right, the market just opened, but I want to talk about CPI, I want to talk about PPI, and I want to talk about the FOMC minutes. Okay, so first of all, let's get CPI out of the way. Pretty good, I'm not gonna lie. Okay, over here you can see went up by 0.1% in March. So right now, year over year, we are at 5% inflation. Okay, of course, index for shelter was by far the largest contributor to the month over month. However, the core CPI actually went up by 0.4% in March. Okay, so you can kind of see the graph over here. It's nice that we actually saw a zero point 0.1 on this side, but it's not exactly good enough. Okay, of course, this data actually came out yesterday, okay, as compared to what I'm going to be recording right now. Okay, that means that whatever I'm going to be telling you is pretty much hindsight, but at the same time, that was also something that I really expected myself, but it doesn't really matter right now, okay? So I did say that, inflation on the other hand, even if it is actually properly tamed, okay, you would actually need to see strong deflation before you actually consider inflation to be tamed. Right now, although we see a 0.1% month over month, it's still a 0.1% increase. Until we see a significant decrease of some sort, the market is not going to suddenly rebound. Okay, even despite having such a good report yesterday, when this report dropped, the market kind of rallied like 1% or so. It's not even enough because by the time you actually see the whole entire market move, all your indexes were flat. Some of them were even down 0.5%. Okay, such as your Tesla, your Apple, all of them, they're all down 1-2%. Tesla was down 3% if I'm not mistaken. So I'm still on short. Okay, yesterday I made about like 7% on my portfolio because I'm still overall short on the market. So I basically was able to earn quite a lot from yesterday's market. But I still think that we have to talk about this. Okay, so the reason why, despite having a 0.1% month over month increase for our inflation, the market still went down. Okay, so it's pretty simple because usually back in the day, aka 2022, okay, when we had the whole Russia-Ukraine war, where the inflation actually came from, a large contributing factor of where the inflation really pumped in from was actually due to energy costs. Okay, but right now, if your core CPI, which is aka the index taking away food and energy prices, is at 0.4% month over month, it means that energy is not even the one that's giving you the main contributing force of inflation. It's actually coming from other things. But of course, with inflation for energy costs, it actually branches out into different things because, for energy costs, it goes to your aircraft, it goes to your logistical, your freight shipment, people who are delivery riders, people who are just doing, deliveries like your UPS, your FedEx and such. All of this are all energy costs. Let's not forget, all your different manufacturing, production line, all of them uses fuel as well. Energy costs increases, all these different branches all go up in price. All this thing goes up in price, it means that the overall prices that the company have to pay out of pocket is going to be higher as well. When that actually happened, then eventually that just become inflation, building on more inflation, and then they have to, at the end of the day, just put all the costs over to the consumer, which is why the consumer at the end of the day get a higher cost in general. Okay, so basically that's what's happening with inflation as a whole. But right now, with energy costs not being the core contributor to inflation right now, makes it a little bit more concerning. Okay, because we used to think that energy was the only reason why we should be afraid. Right now, apparently not. And also, funnily enough, I've always been talking about this. You can go and check every single one of my CPI video. I always talked about how my top concern has always been inflation for food. This CPI was the first CPI in 3 years that we saw a flat line for index for food, which is a very, very good thing. Again, the core index takes away prices for food and prices for energy, which means that food and energy is not even the main contributing factor and they're still up 0.4%. So this is where it gets concerning. It means that your shelter prices are probably still going up at this rate. All your other things are all still going up at this rate, which is why a lot of people are still concerned that inflation is not exactly being pushed down yet. And of course, people are starting to weigh in on the fact that the Feds are definitely going to be increasing a 25 basis point increment instead of pausing. Okay, a lot of people were actually expecting the Feds to be pausing for the next upcoming FOMC. But apparently with this kind of core CPI, maybe not. Okay, for the PPI, okay, I'm not gonna say much about it because the PPI, surprisingly, it actually went down 0.5% month over month. A lot of people were actually expecting it to be at about 0.1%, dropping 0.1%, and somehow it actually dropped by 0.5%. So you can actually call that as very, very bullish. But same thing is not really showing in the market, okay, because the PPI just dropped like an hour ago. I'm looking at the market and I don't think the market thinks that this is a relatively bullish thing. You know, even the S&P 500 is up 0.2% as we speak. Okay, so I don't think that the market is exactly liking it either. This 0.5% doesn't seem to be doing the work for it. But most importantly, what I do want to talk about is the FOMC minute. Okay, I kind of went through the whole entire thing. Well, I didn't really go through the whole entire thing. I kind of just like Control F and find some of the keywords and such. And something that I found really, really interesting was the word recession. So we have to talk about recession for this FOMC minutes. Because do understand that this FOMC minutes is also the FOMC that happened during the banking crisis when Credit Suisse was about to get bought over by UBS, where Signature Bank went down, where Silicon Valley Bank went down as well. Okay, this was during the whole entire crisis. The FOMC meeting went on. People were expecting a pause because if a pause were to happen, it means that the Federal Reserve are probably panicking. We were expecting a 50 basis point hike before SVB even started to shut down, which means that we are expecting the Feds to be pretty hawkish. But somehow we only got a 25 basis point increment, okay, which also kind of put up the point that, you know, the Feds are saying, you know, all right, we don't think that we are in that big of an issue, that big of a trouble, okay, we think that this banking crisis is not going to be persistent, we don't think this is going to be continuing for a very, very long time, hence we are just going to be going up by a 25 basis point increment. So yes, there is a high possibility of that happening. Okay, so I wanted to really look into the minutes, and when I found recession, the Federal Reserve actually talked about how a mild recession is going to be starting this year. We finally got it. A date where the Federal Reserve actually do see a recession, which is why also alongside with the latest FOMC that we actually got, we got the SCP, which is the Summary of Economic Projection. Inside the SCP itself, it actually shows that the growth of GDP for this year can actually go as low as 0%. So if the Federal Reserve themselves are actually projecting 0% growth in this year, chances are we might actually even be seeing negative growth in this year itself. And when we have negative growth, forget about a mild recession, we are in a proper recession. And that's why I think the market just went down even more. Okay, which is why yesterday, despite having a pretty good CPI, you know, and I would imagine that to be an alright CPI report, but everyone was still very, very wary because people wanted to see the FOMC minutes, myself included. And you know, after seeing the minutes, I don't think that we are all very, excited about buying stocks because there's a very, very good chance that things might be on a further discount. So yeah, you know, I don't think that this is really a really good time for you to really buy without studying the market. But of course, hey, you know, not financial advice. Of course, the best move for you to do is always a dollar cost average into any sort of ETF. But for myself, I do like to look at the market myself and actually make those decisions myself. But anyway, I do think that the FOMC minutes did not really give us a lot of data other than the fact that we do have an actual recession projection by the Federal Reserve themselves. Of course, the banking crisis was actually talked about a lot. I think the word banking was actually mentioned 46 times. I do think half of the time those were actually talking about whole banking crisis, about how the whole Credit Suisse situation with the UBS, that was during that period of time as well. So, you know, I do foresee that there is a good chance that they are just talking about how, this banking crisis needs to be solved. And of course, the Federal Reserve, they are the central bank after all, and this is also one of their chores of sorts. But anyway, that's all I have for this video. Thank you so much for watching, and I'll see you guys in the next one.